The market could go down to new lows, the market could trade sideways, the market could grind higher, or the market could V-shape. For me, the highest probability is the V-shape. You know, everybody's got their own favorite analysis for this, whether you're using the weekly RSI or whether you're using 60-month exponential moving average or whether you're using the logarithmic channel. Right, we're record oversold. We're right at the levels. Whether we go down 50% from here or we don't, the upside is 10 to 20x on the entire market cap. This is like the best opportunity you're ever going to be given. And people are over the price. Was it going to go to a new low? I'm like, you're crazy, guys. This is the opportunity.
Popular Ethereum advocate and macro guru Raoul Pal is one of the millions of market participants that are excited about Ethereum's planned transition from proof of work to proof of stake. For most retail investors, the merge will bring about more price gains, probably even a new all-time high for the world's second largest cryptocurrency. But for the Real Vision CEO and co-founder, it represents much more. In a recent interview, Pal explains that all charts show that Ethereum is currently in the oversold region, but there is the possibility of a massive rally after the merge. According to Raoul Pal, the merge puts Ethereum on the path of exponential gains that, in the short term, could see the market cap jump to $1 trillion from the current $241 billion. Such exponential short-term gain will bring in investors in droves, Pal adds, especially institutional investors and sovereign wealth funds. The former Goldman Sachs executive also believes the merge will create a benchmark yield for the entire Web3 space, and the crypto asset will become a benchmark for pricing many other assets. Earlier in the week, Ethereum core developers announced that the merge might be coming sooner than planned, most likely on September 15, the new tentative date for the final transition to proof of stake. The new official schedule is at least 3 days earlier than Tim Baco's last prediction of September 19. It has significantly bolstered investors' confidence in the merge happening sometime during the month. As expected, the markets have responded positively to the news. Early Saturday, Ethereum went over $2,000 for the first time since May 25. The crypto assets market dominance has also increased to 20.6%, while Bitcoin's has dropped to 39.9%. We will now take you to Raoul Pal's interview as he discusses an important opportunity for all crypto lovers. Please watch this video to the end, like and share it with others. If you have any comments or observations, ensure you drop them in the comment section below and subscribe to the channel for more videos. Thanks and enjoy the video.
2018, well, you know, goes sideways. Okay, so that's the narrative. I'm like, yeah, but we didn't have this macro backdrop. So I think that's different. Also, we didn't have the amount of institutions and others still coming into the space. Endless, still happening. So I'm like, so there's demand. And then we've got the ETH merge and everybody's underweight. And everyone's looking at this resistance in ETH between 1800 and 2000. And everyone's going, well, it's never going to clear that. It's going to go straight back down to the new low. That's possible. I'm not saying it's impossible and that I'm definitely right. But I just think, what if it doesn't stop here? It's just had a pullback. Okay, so ETH has been pulling back from touching those levels, which were the lows in 2021, stuff like that. What happens if this little pullback is just the pause that refreshes and we go blasting through 2000? Okay, now we've got a blind panic, and the people who have to panic first are the hedge fund. Then, once that starts happening, it's the retail, because the merge narrative will now become a retail narrative. It's going up for the merge. You've got to be involved in the merge. And then you probably have a pullback somewhere around that. That's pretty sharp and nasty because everyone's kind of got in. But the institution's going to look at this and go, Christ, we've got a yielding asset, a yielding technology asset that is uncorrelated over longer periods of time to everything else. And we've been doing the work on it for the last 2 years. Obviously, the market could go down to new lows. The market could trade sideways. The market could grind higher, or the market could V-shape. For me, the highest probability is the V-shape. And I know that sounds like hopium, but I'm doing it by looking at every participant and their pain points. Now, could be wrong, but only one of those is a new low. This is like the best opportunity you're ever going to be given. And people are over the price. Was it going to go to a new low? I'm like, you're crazy, guys. This is the opportunity. This is the opportunity you're all waiting for, but you can't see it because you're all tick-watching charts and listening to each other get bearish on Twitter. It's like, zoom out, find me a better risk reward. Sure, you might be able to nail and get it down to exactly the tick, but for those people who are longer-term players, here's the risk reward just laid on the table for you, and people don't want to take it until they're forced to take it because the price is going up. Because everybody was sitting there going, well, Bitcoin's going down to 15,000. Bitcoin's going down to 10,000. ETH's definitely going down to 500. It's like, really? You're all sitting and waiting for it. You're all underweight. Who's the seller?
In the other part of Raoul Pal's clip, which we will bring you shortly, he further explains the benefits of the merge and how it would benefit the entire Web3 ecosystem. He describes the merge as a big deal, which could potentially bring the number of Ethereum users to over 4 billion and raise its market cap to over $10 trillion, 10 times the current market cap of the entire crypto industry. Please listen as Raoul Pal explains how Ethereum could go from less than 50% from its all-time high to a $10 trillion market cap and over 4 billion global users.
Let's say ETH is at 3,000. It's going up. Maybe the Nasdaq's going up. People starting to see the bond yields are down at kind of 1.5%. And ETH is yielding 6%, 8%, whatever it's going to start with. This ETH merge is a very, very big deal because of it creates a benchmark yield for the entire Web3 space. This is like everything else can be priced off it. So it can be ETH plus 400 basis points, which is how the world works in traditional markets. I think everything should get priced off ETH. So it'll be
prime rate.
Yeah, so ETH is benchmark. ETH is treasuries. So 1 year ETH is the benchmark rate for Web3. Now we can understand what all risk is and we can trade spreads. So we can now trade risk more efficiently. Part of the issues we've seen is you didn't know what risks was what. Now we can do that. So institutions love yield. They don't like Bitcoin. They don't like Bitcoin because the ESG narrative, and they don't like Bitcoin because it doesn't yield anything. So now you've got a cryptocurrency that is basically access to a technology of gigantic proportions that pays a yield and has negative supply. So this is basically Google giving you 8% yields and buying back their shares. Right, that's like the holy grail. Network effects plus coupons and reduced supply. So I think they will come. They will come in for this. Because and they only have to come at the margin. They don't have to come with their first 50 million bucks. It's the rate of change is what I care about. We kind of know the end story, right? Yep. Which is why this is so attractive as an opportunity. You kind of know where this is going. So what is the rate of change and when does it occur? Because that's when we make all the money. Once everybody's in, we don't make all the money. It's everybody coming in that makes the money. And Absolutely. So it's the incremental new dollar that flows in that wasn't in the system before that's really interesting to me. And so what you're describing is now a path to exponentiality. And so the best place to start that path is at the low end of the range when everything's oversold, knowing that we're going to be starting the next bull market with $1 trillion market cap. Okay, that's kind of interesting because once you're up at $10 trillion, which is somewhere the magnitude of where we'll be at the next peak of a cycle before the Fed start reducing liquidity again, well, at $10 trillion, you've pretty much sucked in the sovereign wealth funds too. And again, with their first allocation, because the larger the market cap, the less they're able to ignore it. The Absolutely. Next cycle up, the first wave of innovators, well, we're seeing it already. We're seeing it with the fashion brands. We're seeing it with music industry. We're seeing it with a bunch of stuff and people like Starbucks and a few Adidas and stuff like that. But once they've gone through another cycle and people realize this is not going away, then it's like, boom, we're at the 4 billion users worldwide because we'll have central bank digital currencies as well. So I just think of it as a path, and we're all a little bit too used to looking at it on the log charts and it all looks quite smooth now. Mm-hmm. But you've got to look at each one of these moments on a bloody linear chart sometimes to remind yourself what exponential means.
What do you think about Raoul Pal's latest take on the Ethereum blockchain network and the impending merge? Please drop your comments and observations in the comment section below, and don't forget to give this video a thumbs up. Thanks for watching.